Yep, okay. Just checking if everyone else can see. Okay, let me...
Sorry, just checking if everything's alright. Okay, everything's good, right? Everyone can hear me, everyone can see me. Okay, I can hear myself and I can see myself, so I'm hoping everyone else can see me as well. I'm just gonna wait for a minute or two for more people to join. Right? Okay, I do see more people joining. Oh, sorry, my screen was switching on. Okay, I'm just gonna start the webinar because it's already 5:04. Hi everyone, welcome to our Tuesday weekly webinars. Today we're focusing on topical. Today's our topical webinar. So Monday is when we do our news and our market updates. Tuesday is our topical webinar. So we basically cover like the basics of technical analysis. It can be anything regarding trading, but basically the basics of trading. It can be trading psychology, it can be like technical analysis, it can be, well, just basically anything to do with trading and how to grow your account and how to be a better trader. So today's topic will be regarding technical analysis. Okay. After the webinar, if we still have time, usually what we do is we move on to the live chart to try to apply what we learned for today. Okay, so let's hope that we still have time for that. If not, it's fine as well, because today our main focus will be trying to get the basics right. Okay, so this webinar is brought to you by Everest Fortune Group, which is in collaboration with Vantage Markets. We're an award-winning research firm and the finalist for 2019, 2020, and 2021 for the best forex and equity research. So we work with major financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets where we're bringing you guys the good stuff every single day. Well, not every single day, but Monday, Tuesday, and Thursday. So, hi, I do see more people joining. I'm assuming again, so we had the same problem yesterday. A lot of people were having troubles getting into a webinar because the link wasn't working, and based on today's attendance as well. Okay, I do see more and more people joining, but based on today's attendance as well, I'm assuming there's also some kind of issue with the link, right? Can you guys just let me know if you guys had a hard time looking for the webinar, if you received some kind of email, or like how did you find your way to this webinar? Can you guys just let me know in the chat box so that I know to feedback to Vantage if something is not working right? Okay. Yeah, you guys can just drop me a chat message or whatever, any questions, whatever, in the chat box at any time. I can see your text, I can see your message, and I'll be able to answer you. Okay, so why like my head's moving all around the place is because I do have my phone on just to see if I am live on YouTube. And I do see myself moving on YouTube, and I can hear myself as well. So I'm assuming I'm, it's the same for everyone, and it's good for everyone else as well. Um, yeah, I mean, you guys, I think there shouldn't be any technical problems this time. The last few times we did have some kind of error, not sure what was going on that time. And yesterday's webinar, a lot of people couldn't find the link. the link was not working apparently. So that's that. Okay, we're gonna start with the webinar proper. So let's meet the team in Everest Fortune Group. So that our team comprises of Desmond Leong, who is our CEO and our chief trader. He basically taught us everything we know about trading. There's me, Cassandra. I'm a prop trader. For those who don't already know me, I think about YouTube Live is I'm not able to see who's in attendance, so I don't know if my regulars are here or not. But for my regulars should know who I am. For those who don't already know me, my name is Cassandra. I am a prop trader here at Everest Watching Room. I also double as an investment analyst. So in terms of trading, what I know about trading, basically, I think this one speaks volume is that I passed a few prop trading tests a few times. I don't know if you guys heard of FTMO or My Forex Fund. I've passed those tests a few times. Basically, the requirement for those tests is that the trader taking the test would be required to do 10% profit within the month. So I've consistently done that like a couple of times, actually more than, not even a couple, like 3 times I think. So I've done that like at least 3 times or 4 times. I think that speaks volume to say that I can be consistent with my trading, and hopefully whatever I share with you guys can implement into your own trading styles, because whatever I share with you guys is basically what I personally use to grow my account and to be better at trading. So hopefully you guys can implement that into your own trading style as well. Okay, so that's that with me. I've got my colleague Vico. You guys have probably not seen her before. She doesn't really take you guys for advantage. But yes, she's a prop trader as well. So that's our entire team. The trading team at least. Okay. Yeah. So I'm gonna move on with the disclaimer as usual, guys. You guys already know this is so important. I know it's so repetitive. Everywhere you go, people are talking about like the disclaimer and whatnot. But yeah, so basically the disclaimer is that this webinar is purely, I just want to remind you guys, it is purely for educational purposes. Is nothing in this webinar should be construed as investment or trading as advice. So please do your own due diligence before trading. All right. Just a reminder, trading FX and CFDs carry significant risk and is not suitable for all investors, especially if you're trading on margin. So do be careful if you're trading on margin. Please do not put your life savings into this. Please diversify. Please do not put all your eggs in one basket. Please use proper risk management. Make sure your trading psychology is in play. You guys can watch our older videos if you need help with any of that. Okay. Um, Okay, so let's start with our topic proper for today. Okay, our topic for today is powerful chart patterns, 2 out of 2. So why 2 out of 2? Because we already did part 1. So part 1 was focusing on reversal patterns, right? But today we'll be focusing on continuation patterns. So continuation patterns and how we're gonna incorporate those into our strategy. Okay. So in this webinar, you will learn various types of continuation patterns. The first would be the triangle, the wedges, pennants, flags, and rectangles. Okay, so these are some of the continuation patterns that we'll be looking at today. 3 of it to be exact. Let me go on to the next slide. So as a prerequisite for any continuation pattern is an existence of a prior trend. So like I'll give an example, like for you to find a continuation pattern to begin with, you need to already have identified an ongoing downtrend or ongoing uptrend, and you're basically looking to get into that continuation and looking to get in at a pullback, okay, or a pullback or some kind of entry, a second chance of getting into that trade. So continuation patterns indicate a temporary pause in the trend where prices consolidate before resuming in the same directions. Okay. The next move will be that in the same direction as the trend that preceded the information, and trading volume plays an important role in confirming these price patterns. Okay, so that's basically the basis of continuation patterns. Okay, these are the most common trend continuation patterns that are like people or traders use. I myself use these, especially the triangle. I use a lot of the triangles and the rectangles. I don't use so much of the wedges and the flags and pennants, but you guys, we're just gonna cover it anyways, right? But more importantly, the one that I personally use and I have found results in using it is by using the triangle and the rectangles. I think these are very strong continuation patterns, the wedges and the flags and pennants as well. But obviously, I can speak more for the triangle and rectangles because I myself have seen it worked tremendously for my own trading style. Okay, so let's move on to the next slide. So in terms of the triangle, there's actually three main types of triangle. One is the ascending. Okay, so you guys can see ascending. Let me just grab my pen. Oh, okay, I cannot use my pen. I just use the laser pointer. Okay, so you can see that it is ascending, and then you can see kind of like a breakout of this resistance. So usually when we find support and resistance, what we basically like our aim or like overview would be that price will continue to move in a certain support and resistance. But with a triangle, like ascending triangle, you can see that there was kind of like a breakout in that resistance, kind of like confirming a continuation in that move into the upside. Okay, so that's one type of triangle. The second type will be the symmetrical triangle. So it's basically a triangle which is this way, right? You can see that it is both like kind of in a downtrend and kind of in an uptrend. So this is the most common triangle where it's symmetrical and there's no clear trend, right? Okay, and then you can see it breaking into one way. So that's another way to play the continuation, which is to get in at the break or to get in at the pullback of that break. Okay, so that's one. And then there's the descending triangle. The descending triangle is where you have lower highs, as you can see, but the lows are the same, right? It's the same. So it's kind of like a triangle, but it's descending in a way. You can see descending, and then you will see a break at the lower part where all those swing lows are at. You see a break, and that's the descending triangle, and that's a confirmation to get in for the descending triangle. Usually what I do is I don't get in straight at the break, right? Because, okay, I do see more people joining. I'm assuming more people manage to find the link. For those who are in the webinar, can you just drop me something? Can you just say something in the chat box so that I know the chat box is working? Right, because I'm not even sure if this chat box is working very well. For those who are wondering why we have so many technical issues, it's because we just moved into YouTube Live. So obviously, and anytime you're trying something new, there will be some kind of like trial and error in the fun part. I mean, the best case scenario is that there are no errors at all, but like that's not the case all the time. So that's why we were having problems, especially with yesterday's webinar, where like some people couldn't find the link, some people said the link was broken and whatnot. So that's why things are happening the way it is. Okay, so that is the three forms of triangle that we use and we try to identify. Okay, it doesn't matter which triangle that you identify. I think the main point of this today's topic is continuation patterns, right? So when you do find a triangle, I think the more important thing is looking for that break, right? So it could break the top part or the bottom part. The top part or the bottom part doesn't matter as long as you find a break, and that is your signal. That will be a signal for the entry to whichever direction it breaks to. Okay, so triangle is a very strong pattern. I personally use it. I personally find that it gives amazing results. So I do recommend you guys using triangles. Like, try to implement triangles into your own trading strategy. Okay, next slide. Let me try to move this. Sorry, just give me a sec. Okay. Yep. Okay, that's another example. So, in the case of a bullish symmetrical triangle, okay, the pattern contains at least two lower highs and two higher highs. Okay, you guys see it? Two lower highs and two higher highs. So when these points are connected to an apex, right, the triangle is formed. You guys see that? It's very easy to identify these triangles. So volume should decrease as the price moves within the triangle, and the breakout is expected to happen between 2/3 to 3/4 of the width of the triangle. So volume should increase as the market breaks out of the pattern. Okay, let me show you guys the break. Yeah, that's that break. And then once you see that break, that is your signal for the continuation to the upside. Okay, so once you see a break, it doesn't matter if it breaks on the bottom part. Again, like I was saying early on, it doesn't matter if it breaks on the bottom part or the top part. As long as you see a break, that is a indication or a signal of the triangle, of price at least trying to tell you that, okay, I'm breaking to the upside now. That it's kind of indicating that there's bullishness in the market now. If it breaks to the downside, it just indicates that there's bearishness in the market. Okay, so like I say this in all my webinars. Okay, no matter who I'm doing the webinars for, whenever you look at the charts, your job as a trader is basically to collect data, right? It's just to collect data and then make a decision of where you think more probably, or like which direction is more probable of price, sorry, of price going to. So when you see a triangle, when you identify a triangle and you see a break towards the upside, it is an indication, or the market's trying to give you some kind of signal that there is bullishness. So right now, when you think of like the probability of price being bullish or being bearish, you know that right now at this current point of time and with the information that you have, you are more biased of price being bullish. That's all. That's all it is. I mean, that's basically your entire life, right? Like everything's just probability. So this is just giving you a signal of which side is more probable. Okay. Once you see that break, most likely it's gonna head up to that side. But then again, like I said, usually how I play the triangle, or how I ever play a breakout, is I like to wait for price to break out, and then I like to wait for price to do a retest. So I like to wait for price to kind of break out of that side, come back and retest this like descending trend line, or retest that triangle before I get in for the buy. I mean, you can get in for the buy in the get-go, right? You can get in for the buy straight here, but I personally like to wait for the retest and then enter from the retest. Okay, why I don't like getting in straight at the breakout is because sometimes I'm afraid that it is a fake out. Okay, so what is a fake out? Fake out is basically when price breaks, for example. So I'm going to go back to that slide before. It breaks here, but instead of continuing this side, it's a fake out, and it ends up going back in within that triangle. It happens a lot. I wouldn't say a lot, but it does happen often. Why it happens is because, like, this example I'm showing you guys is just a perfectly drawn picture, right? It is just a picture or an image that we prepared. But like ideally, when you look at the charts in real time, how the markets move, it doesn't always look so beautiful. lines don't always align, like the highs don't always align nicely. This triangle doesn't usually look this beautiful. Sometimes it looks kind of crooked, sometimes it doesn't look like triangle, but so that's why I feel like chances of having fake outs are high, and I would much prefer playing the pullback instead of the initial breakout. Okay, I hope that makes sense. Okay, so that's what happens. You can play the breakout immediately as well if you like. That's totally up to you. But I prefer, like, I think it's a safer bet to play the the get in at the pullback. Okay. So the opposite formation found in the downtrend is the bearish triangle. Okay, so it's the same as the bullish symmetrical triangle, but in the different way. So the opposite formation found in a downtrend is a bearish triangle, like I was saying. The pattern, sorry, the pattern contains at least two higher highs and two lower highs. Okay, when these points are connected to an apex, the triangle is formed. Volume should decrease as the price moves within the triangle, and the breakout is expected to happen between 2/3 and 3/3 of the width of the triangle. Volume should increase as the market breaks out of the pattern. So it is exactly the same as the bullish symmetrical triangle, but only on the other side. Okay, same thing, same principle, just the other side. Okay, let me just try to fix this mouse. Okay, bullish measuring technique. Okay, so for the bullish measuring technique in the case of a bullish triangle, the first technique is to measure the height of the vertical line at the base of the triangle and extend that distance from the breakout point. The second technique is to draw a parallel line to the lower triangle line, okay, and where it meets the apex. Let me just pull out the apex. Okay, it meets the apex, then we know two things: where the price will be and when, as the price is expected to reach the target at the date where the apex is. Okay, so that's one method um, to use the triangle as well. Okay, I'm just gonna go next. Yep, this is what I was talking about the whole time, which is to get in at the pullback. So you see a breakout, you wait for price to pull back a little, and I personally, my trading style, I would get in here at the pullback. I'll enter here for a buy and then play all the way up. Where do I play to? I usually play it back to this high here, because that's just being very conservative. Just being very conservative, I'll play it back to this high here. I mean, it looks like it's not much, but actually, based on risk to reward, because my stop loss will be very tight here, I would actually make quite a significant amount of profit. Okay, so that's that. So the bearish measuring technique is the same with the bullish, only the other way. So you see the breakout. The first technique is to use a vertical height at the base and extend from the breakout point. The second technique is to draw a parallel line to the upper triangle line. Where the parallel line meets the apex, we know where the price will be and when the price is expected to reach the target at the date where the apex is. Okay, so that's how, that's a few ways to use the triangle. We're going to move on to the wedge. Okay, for a bullish wedge, the pattern is identified by two converging trend lines that are wide at the base and contract as they come together at the apex. Okay, so it's kind of like a triangle, but like it looks like a wedge. Okay, it is an intermediate pattern that. Sorry, I'm trying to. My mouse keeps getting stuck. Just give me a sec, guys. Okay, there you go. So it's an intermediate pattern that takes more than 25 candles to form, but not more than 75 patterns. So when it comes to wedge, when I think about the wedge, it's similar to the triangle, but I don't use it as often. I use the triangle more, and I can vouch for the triangle, but then again, we will still go through this. So the bullish wedge has a noticeable slant to the downside against the prevailing trend. A falling wedge is considered bullish. Okay, so a falling wedge is considered bullish. If you see kind of like a down, a, a triangle wedge that looks like it's on a down trend, that is actually a bullish wedge, right? I know it's just the opposite. Okay, so like triangle, the same breakout periods and measuring techniques apply. Okay, so it's the same. Okay, the opposite pattern is the same for the bearish wedge. That is notable. The slant is towards the upside against the prevailing downtrend. The rising wedge is considered bearish. Okay, so I'm just gonna read you guys the elements of it. It's identified by two converging trend lines that come together at the apex. Okay, it's kind of similar to the triangle. It is an intermediate pattern that takes more than 25 candles to form, but not more than 75 candles. It has a noticeable slant to the upside against the prevailing downtrend. There's a rising wedge, is considered bearish, and like triangles, the same breakout periods and measuring techniques apply. Okay, we're gonna move on to the bullish flags and pennants. So two other continuation patterns that are the one that we're going to look at, as I was saying, is the flags and the pennants. The flag and the pennants represents brief pauses in a dynamic market move. They are both preceded by almost a straight line, okay, move called a flagpole, which happens on heavy volume. Okay, price then pauses for a few candles on the light volume. The move continues on a burst of volume. Okay, do you guys see that? And both patterns occur at about, oh, sorry, not sure why my alarm is on. Okay, which means that the market is expected to move up at least the distance of the flagpole. Okay, so this is the flagpole, and the market is expected to move that same distance. It's kind of like, when I think about it, it's kind of like a Fibonacci projection. It kind of moves like a Fibonacci projection. You basically project that first part of the Fibonacci. You know, the Fibonacci projection is, sorry, 1, 2, 3, right? So Fibonacci projection, you take 3 points. The way you're projecting price to move is actually the first 2 points that you're taking. So how the flag and the flag works is in this way. Basically, this part you're projecting the next move to be the same length as the first part. Okay, this is just one way of getting um, playing the continuation. Okay, so the other one we're going to look at is the bearish flag and the pennants. The opposite is the bearish flag and the pennants, where the prices form a flag or a pennant after a decline before resuming the downward. So you can see there was a break of the support here. It continues here. It kind of pauses a little. It goes a little sideways, and then it continues. So basically, you're looking for a repetition or a copy of this first part to this second part right here. Okay. Okay. So the other one that we're going to look at is the rectangle. So for a bullish rectangle, the pattern is easily identified by at least two similar highs and lows. It's basically a horizontal support and resistance. So when you go to charts, you want to first identify your horizontal support and resistance. Then you would have found your rectangle, of course. Okay, if it rallies on heavy volume and the setbacks on lower volume, then the formation is probably a continuation in the uptrend. If the heavier volume is on the down upside, then it can be considered a warning for a possible trend reversal. Okay, so you look at that, that's a support, and that is your resistance. You're looking for a break at either the support or resistance. Another name for this is actually called price trap. You're basically trapping price within the support and resistance, and you're waiting for price to break on either side. Okay, usually, again, I will wait for the pullback somewhere around here. I'll wait for price to break, pull back, and come and retest this area, and then I get in here for the buy. Okay, so the opposite case is that of a bearish rectangle. Again, if the setbacks are heavy, the volume then is possibly a continuation in the downtrend. However, if the volume is heavier, if the heavier volume is on the upside, then it can be considered a possible trend reversal. Okay, so these are the four. I know at the start of the webinar it says three, but I covered one more extra because I do think support and resistance or rectangles is a very common way of playing a continuation by which you play the breakout, right? So that's all I have for you guys in terms of continuation patterns. If you guys have any questions at all, you guys can ask right now. At any point in time, I'll just answer you guys. If not, we're gonna go straight into the live charts. And if you guys have any requests at all in terms of the live chart, if you guys have any instruments you're looking at, any pairs that you're looking at, or you're considering to get in on, or you're already in that pair and you want like kind of like a second opinion of someone else's opinion of where you think the market is going, you just want a double confirmation, you guys can drop your request in the chat box right now and I will look at those charts. So let me just end this slide and then we are here at the charts. Okay, let me just erase everything. Do you guys have any requests at all? If you guys do not have any requests, I'm just gonna go through some of the forex pairs, right? I'm just gonna go through some of the forex pairs. Hello, can we look at EUR/USD? Hey, Jacob. Of course, we can look at EUR/USD. Just give me a sec. Okay, let me look for EUR/USD. There you go. Okay, so for the purpose of our topic today, because we were looking for continuation patterns, let's try whatever it is that we're looking for. Let's try to look for a continuation patterns in the pairs that you are requesting for. I mean, if we find a reversal, obviously I'm still gonna say it's a reversal, but if not, let's focus on getting those continuation patterns. Okay, one thing's good is that straight up, I do see a continuation pattern, a possible continuation pattern. But the thing is this on a 15 minutes. So since Jacob was the one who requested for this pair, can I just find out if you are already, is it because you're already in this particular pair? Are you already trading it or are you just like on the lookout for something probable? Also, I want to find out if you are a day trader or are you a swing trader, so that I know which time frame to look at. Okay, if not, I'm just gonna start straight with like what I usually do. So I usually look at the bigger time frame. So why I look at the bigger time frames is because I find that structure on the bigger time frame is better or stronger. That means my support and resistance is more. Yes, I'm in a short on 1 hour. Okay, good thing is I do see a short as well, right? I do see a short as well. So if you're on the 1 hour, that means you're day trading, right? So usually if I'm gonna use the 1 hour of my entry, I go to the 4 hours first to see what to see whatever information I can get from the 4 hours. Okay, so right now, just on the get-go, obviously I see a downtrend. I don't see anything else. I don't see an uptrend or anything else. I do see a downtrend. So because we have established that it's a downtrend, now the second good thing is that we can try to look for that continuation pattern, that entry for that sell, right? So if you are in a short, it is good, but obviously your entry does make a difference as well, right? So let's just highlight some levels. I don't know if you want to share with me where you got in for the short. If you don't mind sharing me where you're going for a short, I can try to analyze to see if we can work with that. Okay, so first thing first, I see a rectangle. So remember, we went through four things. One is the triangle, one is the wedge, one is the flag, and the last one was the triangle. The thing, not sorry, not the triangle, the rectangle. So first thing first, I immediately see something that we can apply from what we learned earlier on, which is the rectangle. So a rectangle is where you have like even like resistance, few of the same swing highs in the same area and a swing low in the same area, and then you can see that there was recently a break here. Okay, so one thing about this is that I'm not sure where you got in, Jacob, but like if you got in here, that's perfect. That's like sweet. Like you should be like well into profit. You should be like, let me see how many pips you should be in. Where's the rule? Okay, it's here. Sorry. You should be like, I sell on 1068. Let me just make this bigger. 106812. Okay, could have been a better entry, but at least you got the direction on. I hope you are using proper risk management, because depending on your risk, I'm just wondering where you placed your stop loss, right? Just wondering where you placed your stop loss, so I can kind of like have a gauge to see, like I can give you my take on how probable I think the trade is. Okay, while waiting for that, I'm just gonna let you guys know that one thing good is there was a recent breakout. So like I said, there's two ways to play this. One is to immediately get in here at the breakout, right? You can go down to the smaller time frames to get in for that a better entry. Okay, or two, what you can do is, what I usually do at least, is whenever I spot a breakout, I wait for price to come back and retest that area it broke out to, and then I enter here for the sell. Okay, because I think for me that is the safer bet. The retest is the safer bet. But when it comes back here for the retest, one thing I want to take note of is how the candle structure is as well. So let's say price comes back to this area, right? Price comes back to this area. If I see a super green strong candle here, obviously I'm not gonna get in for the sell, because that's price's way or the market's way of like indicating or telling me, hey, even though I'm at your retest area, I don't think I'm not bearish anymore. I kind of want to go back into that rectangle. I kind of want to go back in. Okay, so when price does come here, I want to see what the candlesticks are telling me. If price comes here and I see a lot of rejection, so a lot of rejection will be when there's a lot of wicks. There's a lot of wicking. I'll show you guys wicking, right? See, these are all wicks. These are all wicks. Whenever you see wicks, that means that there's a lot of rejection going on, right? So one thing I want to see is that there's a lot of rejection going on. The second thing I want to see is that I want to see ideally some reversal candlestick patterns. If I see some reversal candlestick patterns along with a lot of rejection, that's kind of already indicating to me that if I'm price, I'm basically telling you like, hey, I'm having a hard time breaking this resistance. Okay, let me just change this to resistance so that you guys know what I'm talking about. Okay, that's your first resistance. That's your second resistance. Okay, I do want to break this first resistance, but I'm having a hard time, and therefore I'm wicking a lot. Okay, um, so because I'm having a hard time you should be okay to enter here for a sell. Okay, so that's ideally what I want to look for when price actually goes back to that area. Okay, but this is on the 4 hours. This is on the 4 hours. So take note that this is on the 4 hours. Okay, why I say that you have to take note that this is on the 4 hours, because I noticed early on when we clicked into the 1 hour, the retest may have already happened. Okay, so let's say price is moving within this rectangle, which we learned earlier on. Okay, so just adjust it a little down. So remember what I was saying. Usually I wait for the break. After the break, I wait for the retest. And then from the retest, I enter for the sell. Okay, so if you look closely, it kind of looks like, although price didn't really touch the first resistance area, it didn't really exactly touch the first resistance. I mean, it depends on how you draw the first resistance anyways. If I move it down a little, it does look like it had touched already. But if I use it based on this swing low here, then it has not touched. Okay, but then again, we need to take note. You need to always remember that support and resistance is not one line. Okay, it is not just one um, price. So right now it's placed at 1.07614. That's never the case. Support and resistance is never just one price. It's always a zone. So when I say it's a zone, usually you can use your Fibonacci levels to kind of find that zone, or you can see what other things are lining up there to find that zone. So let's say I'm gonna look for a Fibonacci level that lines up there. There should be something that lines up there. Okay. If I'm based on this 38.2%, right? Let me just get rid of everything else and only leave the 38.2. I would say my resistance zone is this area. Okay, I'm just gonna highlight that area. It's a zone. I can move it down a little and the zone would still be valid and would look like price already did the breakout, already came back and tested the resistance, and it's on the way down already. Okay, so that's one way to look at it. If you're looking on the smaller time frame, which is the 1 hour, but if you're looking at the 4 hours, it doesn't look like price has come back and tested. So there's still a chance that price comes back and retest this area before it continues down. Okay, so it also depends on which time frame you're looking at. On the 1 hour, it looks like this trade is already over. On the 4 hours, it looks like price has yet to come back to retest. So what my advice to you guys is, what I can tell you guys is, if you're unsure, what you can do is wait for price to actually come back on the 4 hours. If you're looking at the 4 hours, is the 4 hours, if 4 hours is the time frame you're using to get in on your entry, you can wait for price to come back to this first resistance, see what price does here, and then you can consider for the sell. But if you're looking at the 1 hour, it kind of looks like it already did the retest and it's already on its way down. Okay, so depending on where price moves from here, that only you can make your second decision, your upcoming decision. Okay. What I would want to do is wait for price to come back here. I'm gonna wait for the retest. I'm gonna wait for a retest and then play it down. Hopefully there is an entry for sell there. Okay. Jacob, one good news I have for you is that if we're looking at a smaller time frame, it looks like it already happened. If price decides to follow the smaller time frame structure instead of the bigger time frame, right? That means price is just gonna keep dropping from here. Okay, and you should be good. Okay, but if it doesn't follow the small time frame, then if it's following the 4 hours, then you need to take note that there is still an opportunity that price will come and retest here. Okay, so that's the only advice I can give you as of now. But yeah, this is a very good example of how a rectangle break would look like and how you can play a continuation to the downside. A continuation. Okay, this is what a very good continuation pattern looks like. Okay, so no worries. No worries, Jacob. So the next thing I want to do is try to look for a triangle for you guys to see. Okay, because we went through triangle, we went through the flat, we went through wedges, and now we've gone through rectangle. We just nice. Jacob requested for EUR Euro USD, the euro dollar, and just nice there was a rectangle breakout. Okay, doesn't happen on all my webinars, but it happened today, so that's a good thing. Another example I want to find for you guys would be how a triangle breakout will look like. So when I'm looking for triangle breakouts, I want to go straight to gold. Okay, why gold? Because gold tends to do a lot of triangle. It does a lot of triangles. It's because why its goal is always being a triangle is because goal is always just consolidating within like a certain range of price. So that's why structurally it looks like it's constantly moving in a triangle. So I'll give you an example of a triangle on goal. Let me see. Okay, no triangle, no recent triangle. There might be a wedge here, a descending triangle here. Okay, remember there was one triangle where all the swing lows or all the swing highs are the same, right? But it's this part that is either descending or ascending. So let me move. This is a form of triangle. I would much prefer if there were more touches, right? In this case, it's only um, 2 touches, which is fine as well. 2 touches is fine. Okay, so one thing, especially with the slides that we saw earlier, the example that we're using, usually when you find this kind of triangle, the breakout happens either at the swing low or either at the swing high. Okay, so that's one thing. So usually it comes here, does this, does this, does this. When it comes to like 2/3 of the part or like closer to the end of the triangle, usually somewhere around here there will be a breakout. Okay, usually the thing is usually. Okay, that means probability wise there's a chance price is just gonna bounce from here, do whatever it wants to do. The next time it comes back, there is a chance, there's a probability that price is going to break here, and you can enter here for a sell. Okay, so that's one thing you guys might want to look out for. Okay, that's one thing you might want to look out for. Okay, this is actually not the triangle I wanted to look. I think it's the descending triangle. The triangle that I wanted to find for you guys and show you guys that is so common, with gold is the parallel triangle. So it happens all the time. Okay, there's a good example here already. Okay, a parallel triangle is where there is both a descending trend line and both an ascending trend line forming this kind of like triangle. And then, do you see the triangle? Right? And then there's going to be a breakout on either side of the triangle. Usually when it comes closer to the end of the triangle, there's always going to be some kind of breakout, either to the upside or the downside. And then you can play your continuation for the buy or the sell. So this happens with gold all the time. Like if we look back into the past, you can see it happening all the time. This is a very good example. There should be more examples. There would be one here as well, right? There would be one here as well, right? There would be another triangle here as well. Okay, let's say we back play a little. Let's just move this here. Okay, let's just move this here. Let's get rid of like previous time. So my whole point is that triangles happen very often with gold. Okay, so if you are a gold trader or someone who likes to trade gold, you will see triangles happening all the time with gold. Let me just adjust this so that the triangle looks better. Yep. So usually when traders spot the triangle, what they want to do is wait for the break on either side. They wait for the break on either side, and then whichever Whatever side it breaks to, they usually enter there for the sell or the buy. Okay, that's how people play the triangle. That's how they use triangle for continuation patterns. Okay, but as we saw, this was not the best example. Let's just play this out. Okay, let's just play this out. Let me get rid of all the drawings. Okay, you can see that there was a break and then it ends up being a fake out. I didn't predict this because I saw what happened. That's why I know it was a fake out. So it looks like it broke. Traders or whoever that's trading or whatever will be like, okay, there's a break. I'm gonna enter here for the sell now. I'm gonna enter here for the sell and then get in all for the sell. I mean, they would have been able to make a little bit, right? They would have been able to make a little bit depending on where their take profit is. I mean, if you get into a trade, you need to know when to get out, too, right? So they get in for that, and then they play it, and then it ends up going back inside the triangle. Okay, so this is the problem I was saying earlier on with buying straight at the break, right? That's the problem that I was saying earlier on. What I much, much, much prefer doing is to wait for price to break, come back and do the retest, wait for price to give me a signal to say that, hey, I still want to continue going down, and then I enter for the sell. This way, if I am wrong, like in this case, I am wrong, my stop loss would be much tighter. Um, and my risk to reward would have been much better. Okay, I think the chances of you being profitable is higher with this technique rather than playing the buy, like the initial breakout. Okay, so do be cautious if you are playing the initial breakout. I'm not saying that you cannot. I'm just saying based on my own personal experience, I much prefer playing the pullback, right? I much prefer only getting in when price pulls back. Because when look at it. When it pulls back and I see it like kind of going back inside, it's already an indication for me not to get into the trade. So in this case, it looks like I'm not gonna get into a lot of trade, but at least it's safer, right? At least safer. So let's just play it out. It went back into the triangle, came back out again. For me, this trade is over already. I'm not even gonna look at this anymore because there's too many fakes happening with this. And it comes back out the triangle again. Okay? There's one thing wrong with this. There's two possible things that could have happened here. One is like the triangle wasn't even drawn properly. That's why there was a fake out. But based on this, let me see. Yeah, there's a possibility this triangle wasn't even drawn properly because for a valid triangle, you would need, sorry, let me try to see. Yeah, you would need 3 points that are touching, which is 1, 2, and 3, right? So I would actually consider this, I would already consider this a valid trend line. Like personally, I would consider this a valid trend line. But um, maybe why this trade didn't play out is because the triangle wasn't drawn properly. That's one possibility. And two, it was just a fake out. It's just a fake out. We just need to accept that a lot of times sometimes fake outs do happen. Okay, so there was a fake out. When it came back and retest this area and I see it going back inside, it's already an indication for me to not get into the trade. And if I don't get into the trade, I save myself some money and I save my account from shrinking. Like, yeah. Okay, so I'm out. This isn't even working nicely anymore. I'm totally gonna ignore this trade, and then I'm totally gonna ignore the triangle because clearly price does not respect the triangle. So let's just fast forward back to present day. Clearly, price much respects the latest triangle, which is the one here, which is a good thing. There was a recent break. There's a recent break here. I'm trying to make this triangle as beautiful as possible. Okay, there you go. recent break here, and then it's not a fake out. It really went up. It really continues. And if you're playing my strategy where you wait for the pullback, it kind of looks like price didn't pull back, right? It looks like price didn't pull back. It looks like price broke out and immediately just took off from here. But what I can tell you guys is if you zoom in, price did actually retest. So there was a breakout here. You see this red candle, price came back and retest, and then it shot up, right? It may not be very clear if you're using a candlestick pattern, but if you change your candlestick to a line chart, right, you can see that price broke out here and it did kind of retest here. Based on the line chart, it looks like it didn't touch a triangle, but because of how the candlestick was, there was wicking, right? It wicked, touched the descending trend line, and then just took off. Okay, that's a very easy one to miss, but yes, that's actually how people get their entries as well. You see that red triangle? I'm sorry, that red candle. That red candle is actually one indication of a retest of a pullback retest, and people like me, traders like me, would have or might have got in here for a buy. Okay, so how I do a double confirmation is I go down to the small time frame to see. Hey, what happened to my lines? Okay, yeah. Yep, on the smaller time frames, you can see how clear it is. You can see how clear it is. There was a break here. On the 4 hours, it came and retest, and then here you enter for the buy. Okay, so that's how I would play a continuation using a triangle. That's how I would play continuation using a rectangle. The wedge is basically the same ideology as a triangle, and the flag and the pennant is basically similar to the rectangle breakout. Okay, so that's all I have for you guys today. I hope you gained something from my webinar today. One thing I do want to take you guys to take note of is that there may be some kind of price trap going on here as well, right? It looks like there's some kind of price trap going on here. Hopefully there's going to be a break. If there's a break here, you can consider getting in for a sell when it does a retest. If not, just wait and see what price does. Okay, looks like there's a descending trend line here, right? So if this descending trend line is valid, price will come here, retest, and then come back down. Okay, so that's that. If you guys caught this earlier, this would have been a really beautiful trade. If not, it's fine. The market is constantly repeating itself. If you didn't catch that trade, it's gonna happen again. Okay, so thank you guys. I will catch you guys on Thursday. That's when our next webinar is. I've ran out of time. Okay, I'm so grateful you guys came. I think can you guys just let me know if you had troubles looking for the webinar? I'm still wondering why our regulars are not on our webinars. I don't know if it's still because of the link problem or it's because you guys couldn't find your way. Because yesterday someone was saying that the email that was sent to you guys, the link wasn't working well. That's why you guys haven't been joining the webinars, right? So I see Jacob here. Jacob was here yesterday as well. So clearly Jacob didn't have a problem with the link, but I don't know if anyone else had problems with that link. If you do email Vantage, do let them know, or if not, reach out to us and let us know. Okay, so thank you guys. Thank you, Jacob. Thanks for attending our webinar. I'll catch you guys on Thursday. Okay, bye guys. Stay safe.